All right, let's start a technical look by taking a look at the euro versus US dollar. And I want to take a broader look by starting off at the weekly chart. And if I look at that chart, what do we notice about the range this week? Well, the high price for this week came right up to this level right here. This level corresponded roughly with the 50% midpoint of the move down from our high price right here to the low price right here. Again, this is the high price going back to 2020 to the low price that we saw in 2022. So that 50% retracement coming in at 109.42. Our high price got within 14 pips of that at 109.28, and the market rotated back to the downside. Now, the low price for last week, which actually occurred on Monday, came in right around this level right here, which is low, which is near the 38.2% retracement of the same move to the downside. So if we take a look at the weekly chart, what do? We found support against the 38.2. We found resistance against the 50% retracement. Also, within these or near these levels is on the top side the 100-day moving average. That's the 100-week moving average. That's the blue line in this chart, and that you can imagine that's going to be coming down in another couple of weeks. It's going to be right on top of the 50% retracement level. So be aware of 109.42. It's going to be a key level not only this week but going forward. If we move above that level and above the 100-week moving average, things would turn more bullish, wouldn't it, from a technical perspective? On the downside, keep your mind focused on the 38.2 near the 106.10 level. That level also happens to correspond with things like this low right here and other levels through here. You can see a number of different times the market found either support or resistance near that area. So this 106.10 level not only has the 38.2, but also resistance levels or resistance and support levels going back in time from other lows and highs in time. So that's a weekly chart. Let's drill down to the daily chart. And if we look at the daily chart, the high price, remember, came in near the 50% on the weekly chart. That level also corresponded with some levels going back in time, like these lows through here and these highs through here. And then we moved away from that, and we came back up toward that level near the 107.40 level. Admittedly, in the early part of February, the market moved above for one day and then broke back below it. And what was important here is the market refound some resistance against the 104 level right the day after and moved to the downside. And what did? We came up to that toward that level on Thursday's trade and found willing sellers against that level. So not only do we have so on the downside, what do we have? We have the 100-day moving average, and similar to what we saw right through here, where the market comes and retests the level. We found support buyers against that level. We broke below it here and then retested it right here and moved to the upside. So that 106.079 level, which happens to correspond roughly with the 38.2 at 106.10, is going to be a key level on the daily chart as well. So we pretty much defined what we've on the daily chart, the resistance and support levels that we found on the weekly chart. Resistance and support, 38.2, 50% on the daily chart, the 109.40 swing level, and the 100-day moving average at 106.079. So no difference there. But key levels on weekly and daily chart. Now let's go to the hourly chart, and this is going to be the one that's going to determine short-term bias for our trading this week. And what we notice on the downside here is a 200-hour moving average. That's the green line in this chart. We found support, found support, found support. This is Friday's trade right here. We did break below the level right here, but reestablished support against the 200-hour moving average. Always a clue. When we have a failed break, we reestablish support against. That gives us a clue to the upside or downside, depending on which way you're going. So we did. So the 200-hour moving average is going to be key. And then on the top side, we have the 100-hour moving average. That's this blue line in the chart. And we can see that when we broke below it here, what do? We reestablish resistance against it right here. That looks familiar. Yes, it does. And so we have the 100 on the top side, the 200 on the downside. Also near these levels is the 50% retracement near the 200-hour moving average. And on the top side, we have a resistance from this swing area through here before the market broke to the upside. Again, we broke below it and then used the 100-hour moving average. So about this area right through here is going to be our key level. So going into the new trading week, what you can count on or what look forward to is if we break above this area right here, it's more bullish. If we break below, it's more bearish. In between, it's more neutral in this area right through here. So pick your poison. Either move to the upside or downside. That's how I see the euro versus US dollar.